What was the big takeaway for you? What did you learn about Nvidia's data center business?
Well, certainly the numbers were very strong, and as you said, expectations were elevated coming into the print. But the concern that we heard from investors coming into this event was not about how strong the numbers are right now. It's really about where do we go from here. And I think there's some concerns over just kind of peak revenue here in calendar 24, precisely because Nvidia has become such a large part of overall cloud CapEx. And what we think they need to do next is give people comfort that there's just going to be enough dollars to be able to generate Nvidia growth.
Right.
What we think is of the next year, there's enough product cycle catalyst, there's new products coming out, and most importantly, the pricing of those products are substantially higher, which is driving growth. But the longer term that I think kind of really moves the stock well over $500 is convincing people that there's enough dollars flowing into the data center to be able to accommodate this growth.
Okay, so let's go there. This is what Jensen Huang, the CEO of Nvidia, said on the call. Absolutely, he sees data center can grow through 2025. Several factors or reasons. They're expanding their supply quite significantly. Do you buy that? And that's calendar year 25, by the way, not fiscal 25.
Well, certainly that's the case. And, we speak to the suppliers in that, and certainly they're adding capacity. There's a particular type of assembly backend capacity that's very unique to Nvidia that nobody expected it to be this large at this point. It takes some time to add that capacity. That happens. Again, the other factor, which I think is somewhat misunderstood with regard to the stock, is a large part of the growth is coming from pricing. And that's a function of Moore's Law slowing down. The chips themselves are more expensive. The H100, the current version, is almost 3 times as expensive as the prior version. But the benefit that NVIDIA gives you is it's more than 10 times the performance. So basically more of this pricing is coming to NVIDIA because they're giving you so much more performance for the same dollar.
So the big unknown is the long-term ability to sell chips into China. This is what Colette Kress, the CFO, said in the letter to shareholders, that basically there will be an impact in the fiscal 4 from US technology curbs, right? And they will ship less to China in that quarter, but they will more than make up for it in growth or offset by strong growth in other regions. How do you price in the China risk on this stock?
Well, for right now, for the January quarter guidance, there's very little China in there right now. So, to some extent, that's been de-risked already. We also, and the company talked on the call, and our own checks have been indicating that there is a new chip that will be compliant with China that will come out in the first half of next year. You would imagine that there's some pent-up demand for that chip since that, they can't ship it in the January quarter. The question that management doesn't know is what's going to be the reception of this chip in China. And it's going to have less performance because that's what's required to meet the new regulations. But, what are the Chinese going to do with it? Our view is that we think the Chinese customers are still going to buy it because there's really no alternative in the marketplace right now. And the problem is that there are local Chinese alternatives from folks like Huawei, for example, but that's also accompanied with manufacturing restrictions on China. So Huawei, for example, they can build an AI chip, they can design an AI chip, but they can't build it with leading edge technology because Chinese manufacturing facilities don't have access to that.